do you believe in trying to be 100% in stocks, or do you believe in pairing that with other asset classes to try to dampen down volatility, knowing that your returns may be lower over time?
Let me answer it in the following way. If I am talking to somebody, which I often do, of say new assistant professors in my university, that we have a retirement plan and it's matched by the employer, I say you should probably be 100% in equities, because one of the things, if you're putting money in regularly, the volatility is actually your friend rather than your enemy, because what you're doing is dollar cost averaging. And when the market has its swoons, which it inevitably will, you're buying more shares at that low price. And yep, you're going to be buying at the top of some bubbles, but you're at least buying fewer shares. And your average cost per share is going to be less than the average of the prices. So for a young person, don't worry about what your 401k or 403b plan looks like month by month. Just keep putting the money in, and by God, 20, 30 years from now, you're going to be very happy with what you did. Now, for someone like myself, who actually did that and now has the advantages of having a very large IRA, and I am required to take required minimum distributions. What I do is the distribution that I'm going to have to take in 1 year is in a 1-year treasury bill yielding almost 5%. And the stuff that I'm going to have to take out in 2 years should be in a 2-year treasury bill yielding 4 3/4%. So there's no one right portfolio for everybody. And there's no question about the fact that in general, people who are older, and especially those who are taking out required minimum distributions, you need something balanced with other asset classes. But I would say for very young people, I would certainly start off all equities, because equities are the favored asset for the long run. And furthermore, if I, as an economist, kind of worry about what the economic situation is likely to be over the next 5 to 10 years, I think there's a very good chance that we are not going to get down to 2% or less on noticeable inflation. And remember that with equities, you're buying companies that have real assets that do tend to be good inflation hedges. But
assets that can
the diversification,
yeah.
Probably other real estate and other equity investments as you get a bigger portfolio would be something that I would add to the basic equity portfolio that I think everybody should start with.